What if I told you a company that a judge just argued wanted to A, either dump shares on their shareholders as much as possible to raise money, obviously so the company could survive and the board of directors and the executives could keep their posh jobs with rich stock payouts? And if that diluting of the stock didn't work, issuing new stock, if that didn't work, what if I told you they then rigged a shareholder vote, legit rigged it, to be able to dilute you in another way, going around what retail shareholders actually want? What if I told you that a company just did that, and it could potentially be the greatest scam since Enron? Probably be pissed, right? Let's get into what the judge just said about AMC, and of course, the AMC preferred equity units. Keep in mind, I have been covering AMC and APE for over 2.5 years. In fact, 10 months ago, I made a video warning about what was about to come with APE. APE shares are going to be worth as much as that NFT is going to be worth. Zero. In 6 to 12 months, I expect ticker symbol APE will be worth $1 or less. That would be an 86% decline from today. And it'll be worthless and delisted soon after that. The shorts will win.
What's the point of selling?
But the point of selling is the thing's gonna go down. I mean, there's no fundamental under APE. That's why I sold my APE units at over $8 per share. Now, why did I do that? What did I see? And what was reality? And boy, based on what the judge just said, I hate to say it, but reality was even worse than I anticipated. But first, let's understand AMC and a little bit of background about AMC. It's a movie theater. During the pandemic, they took on a lot of debt and their sales declined. More people are willing to stream at home and watch movies and stuff at home because they got more money to buy some big TVs. And quite frankly, you didn't really have to go to movie theaters anymore. So, movie theaters have kind of been pained. Not only have they been pained, but because they took on a lot of debt, a lot of their cash flow has gone straight negative. Let me give you a brief overlook of AMC. AMC in just the last 3 months has burned $237.3 million. That's burning nearly $80 million per month. But not only that, their balance sheet, which shows how much cash and bills they have, shows they've got about $500 million in cash, and they have some receivables, but they have $747 million of bills on their desk. Imagine if somebody came to you and said, hey, did you know you have $7,500 of bills on your desk, but only $5,000 in your bank account? Now sure, you work a job and you got some money coming in, but you're actually losing $800 a month, and you still gotta pay those $7,500 in bills, and you got $5K in cash. That's a little bit of a problem. You might think to yourself, well, maybe I could borrow some money. Maybe, unless you already did a lot of borrowing. And that's exactly the problem with AMC. See, they pay about $1 million per day in interest. Not only do they pay about $1 million per day of interest, but they have corporate borrowings of $4.8 billion. In addition to that, even if they were to close down non-performing stores, they'd still have these leftover operating lease obligations of around $4.1 billion. In other words, this is a company that really needs to raise capital. And that's exactly why the CEO of AMC says, hey, look, we need to raise money to be able to survive. And he's not wrong. This company absolutely needs to raise money to survive. If they don't raise money, they might not survive. And he actually makes a good point by saying, look, we need to defeat the short sellers and take the bankruptcy risk off the table by being able to raise money, because raising fresh equity in the near term is critical to our company's success. We must be able to raise capital, otherwise we'll go bankrupt, just like Bed Bath & Beyond and Cineworld, or the Regal theater chain, second largest theater chain in the world. Well, now the AMC CEO and board want you to believe that they are much smarter. And of course, maybe they've been much smarter because, well, CEO Adam Aron has been dumping stocks. In fact, he's sold about $40 million worth of stocks since November of 2021 and just January of 2022. In other words, he dumped a lot of shares in just a 2-month period. Now, he goes and says that he's a hodler and he was only selling shares through pre-planned 10b5-1 plans, which is really a fancy way of saying, that's my excuse for selling. It was a plan that you crafted. Okay, whatever. But is any of this really sinister? No, this is just the backdrop. But what did the judge just say? So here's what happened at AMC. AMC tried to raise money in 2021, but shareholders were unsupportive. That's because if you raise money, usually the stock price goes down, but the company knows they need to raise money. So what they did instead is they lowered the number of board members who actually need to vote to decide certain changes or new proposals for, let's say, dilution at AMC. This is basically a way of saying, let's give more control to fewer people. And shortly after that first vote failed, they tried again to issue 25 million shares to raise money. But once again, shareholders said, no thanks. And AMC decided, fine, we won't try to raise money. So obviously, twice, shareholders rejected AMC's opportunity to raise money. So instead, AMC came up with the most beautiful, elaborate ruse I've ever seen in the stock market since the days of Enron. AMC announced they would issue APE, which is convenient because APE is what people say about AMC. Oh, I'm aping into this. I'm holding on to this because it's going to go to the moon. It's going to go to $1,000, whatever. But that actually stands for AMC Preferred Equity Unit. That's sort of the fancy legal name they came up for it. And it was basically a stock split. It was essentially a way AMC would say, hey, we're going to carve out some of AMC stock and give it to you as APE. However, we're going to make APE rigged. We're going to set up APE in a way that's dirty. And so what ended up happening? Well, the APE shareholder agreement said that even if these shares are technically equivalent in economic power, we are going to say that in the event we can't dump this stock and raise enough money, we are going to change the way voting is done. So think about this for a moment to catch you up to speed. You have one big giant pie, okay? This is the easiest way to picture it. You have a giant pie, and that pie is AMC stock. But now what we're going to do is we're going to carve out a section of that pie, and we're going to call a section of that pie the APE stocks. And these are the APE, the AMC Preferred Equity Units. These APE units are going to go on the market under a separate ticker symbol. And what we're going to do is we're going to dump APE stock as much as possible so we can raise money for AMC, which AMC tried to do, but unfortunately failed. They were too slow. In fact, some of my original videos covering APE, I specifically warned that the only reason these shares existed was to dump on you, and they would end up reducing the value of the APE shares dramatically, which is why I thought, okay, if you want to hold AMC, but don't hold APE. That was the warning that I gave 10 months ago. But even AMC couldn't pull that off. They failed because they took about a month to actually start trying to dump shares. They issued APE units around August 21st of 2022. And about a month and a week-ish later, AMC finally entered into a distribution agreement with Citigroup to sell 425 million APEs. We knew this would happen. Unfortunately, the campaign was unsuccessful because by December, APEs were trading below $1 per unit, forcing AMC to stop selling additional APEs on the open market. Not a surprise. In fact, that's exactly what we predicted would happen and why holding APE shares was a bad idea. But that's okay because the board knew there was a risk of this, and they came up with a different strategy. If we are not successful at dumping these shares on the market, what if we have something else? What if we then say we have AMC shares, but these new APE shares we created have a little asterisk on them? And here's how this is going to work. When retail shareholders vote in AMC, their vote counts. So in other words, if you get 10 people who vote for an AMC election and 90 people who don't vote, what do you end up having? Well, you have 10 people who voted, and if, let's say, 6 of them said no raise, in other words, rejected a money raise, well, now the majority say no raise, and then guess what? No raise. AMC can't raise money. That's usually how shareholder elections work. It goes like the majority is based on the number of people who voted. So even though 100 people in this example, 100 had votes, only 10 voted, 90 didn't vote. Of the 10 who voted, most said don't raise money, AMC. Fine. Well, what if I told you there's a way you could scam retail with APE shares? Let's say 100 had votes, 10 vote, and 90 don't vote. But now what we're going to do is we're going to change what happens to the don't votes. The don't votes are now going to vote automatically the same way the majority votes of those who vote. Okay, so wait a minute. This is a little bit rigged. What we're now saying is, the way this gets set up is if 6 people are, let's say, a friend of the CEO's, and 4 people are retail, let's just say, for APE holders, right? And 90 people don't vote. Now, all of a sudden, 96 people will automatically, oops, I'll spell that correctly, automatically vote the same way as the CEO's friend. Now what do you have? Now you have a way to control the election because you're assuming that retail shareholders will not vote. And that assumption ended up being correct. Retail shareholders do not end up voting. That is not a horrible surprise. Retail shareholders generally don't vote. When's the last time you voted in a shareholder election? It's very rare to actually vote as a retail shareholder. It's usually the vanguards and the brokerages and the suits who like to vote. So, did this actually happen? Yes. And it was even dirtier than what I just described. In fact, watch this. Here's the CEO's friend. We'll call them Anterra Capital. And the board happened to approve the sale of 110 million APEs to their friend, Anterra Capital. Now, Anterra realized they were now holding the bag on APEs, or a commitment to buy APEs, that weren't actually very valuable because they realized these were going to get diluted to nothing, and they already mostly had been diluted to nothing. Now, to make it look good, Anterra said they would agree to a lockup agreement that would keep them locked up for 90 days. It says it right here, at least 90 days. So the CEO friend is like, yeah, okay, we'll go ahead and buy $34 million worth of APE units on the market, and we'll commit to buying another 110 million, and you know what? We'll keep them for at least 90 days. Okay, so now all of a sudden, you have the CEO's friend who's going to promise to vote with the CEO. Wait a minute, where does it say that, Kevin? Oh, it's the very next line. It's right here. Anterra agreed to vote all of its APE holdings in favor of the proposals. The proposals being whatever the CEO wants. Huh, interesting. Okay, and the board specifically told Anterra that there was a good chance AMC would basically get what it wants through this new ruse, which is to raise capital, right? Now, this is where things get wild. You ready for this? This takes a little bit of a drawing out. So, Anterra agrees to a 90-day lockup. Ready for this? You agree to a 90-day lockup. Now, you have a specific date of record that hits. That date of record says whoever holds shares on that specific date gets to vote. And then what ends up happening? AMC says, let's remove the lockup. And then guess what the CEO's friend does? They dump the shares. Wait a minute. Is that what happened? Did the CEO's friend come in, promise to vote the way the CEO wants, holding the bag on basically worthless APE units, promising publicly to hold the stocks for 90 days, only to basically hold them for a day or so until the date of record of a specific meeting that was coming up that the CEO wanted this group of people to vote in? Then AMC happens to remove the lockup and then they dump their shares. Oh, interesting. That's actually exactly what happened. The next day, AMC announced that it would hold a special meeting within 90 days for stockholders to vote on proposals. On February 7th, AMC issued APE units called for by the AP or the Anterra transaction. 2 days later, AMC waived the shareholder lockup restrictions, permitting Anterra to dump ahead of the meeting. And then what? Since the record date for the special meeting was Feb 8th, Anterra could still vote on any shares that it had sold. It's a complete rigging. But not only was it a complete rigging in that the CEO's friend was basically able to pump and dump. You want to see it? Here it is, around Feb 9. Look at that. Here's the pump. Yay, they agree to a lockup. Oh my gosh, the lockup gets waived. Oh, they dump. Pump and dump. Then you get the bleed out. It's like in our face, pump and dump. It's just absolutely disgusting that this is even legal. This should be highly illegal. But then, guess what ends up happening? Well, no duh, only about 25% of shareholders end up voting to agree to the dilution that AMC was proposing to raise capital. However, because of what was known as the mirrored voting feature, which I described earlier, because of the mirrored voting feature where the people who don't vote automatically vote in favor of whatever the board wants, 91% of APE units voted in favor of the share increase proposal. And a majority of the stockholders and a majority of the APE units did not give any voting instructions at all, let alone in favor of the proposal. This is a court document written by a judge that literally says the proposals passed only because of the APE's mirrored voting feature and Anterra's promised votes, which Anterra had already dumped by rigging the game. That is a scam. But folks, I hate to say it, it gets worse, because we need to talk about the practical next steps. We already know that this was set up as a scam. Think about high level what we just talked about. AMC needs to raise money. The CEO is dumping shares, knowing he's on a sinking ship. Takes advantage of the meme movement by offering people an ape share and an NFT if you hodl your ape shares. Then, strategy number 1, let's dump as many APEs as we can. Oh no, we suck at the stock market and we failed to dump enough shares before it went basically to under $1 and we couldn't dump anymore. Okay, execute strategy number 2, which is let's use the APE rigged voting method to increase the number of shares that we can control by authorizing a merge of the AMC and APE shares. But now we have slightly more APE shares in control, and now we can vote whatever way we want. And we'll do that by calling up our friends and allowing them to hold these worthless shares for a few days, while obviously we get a commitment from them to vote the way we want and make sure to rig the entire election. That's basically what happened here. But now the question is, what happens next? Is this good for AMC or is this bad for AMC? Well, first, after this ruling, a lot of people sent me messages and said, this is great. The judge said AMC is not allowed to convert APE into AMC. This is actually something I talked about 10 months ago when I said, look, if you're a shareholder of AMC, you do not want APE to convert into AMC because it's just going to dilute you more. And so a lot of people cheered. They're like, this is great. If the judge just denied that APE could turn into AMC, that's good for AMC stock. Well, in the short term, maybe that is good. But in the long term, AMC is still trending towards bankruptcy because you saw the cash numbers, right? They got some work to do. But that's not actually what the judge said. See, the reason the judge is even involved here at all is because the shareholders of AMC are suing the board of AMC. The shareholders are pissed. And in this proposed settlement, where basically the board settles with AMC shareholders, the settlement calls for APE shareholders taking a small haircut. In other words, APE shareholders are going to get slightly less of the new pie after a settlement is created. Well, the judge says, to cut to the chase, the settlement cannot be approved as submitted because you can't release claims for people who aren't actually a party to this lawsuit. And that's what they're arguing. Now, I'm oversimplifying a bit here, but basically they say here, you can't award more common shares to stockholders at the expense of the APE units without the APE folks being represented in this lawsuit. Therefore, the settlement cannot be approved as presented. The court also says they're not going to address any theories on synthetic shares, Wall Street corruption, dark pool trading, insider trading, RICO violations, and a request for a share count. The judge is not going to evaluate any of that. What the judge here basically did is say, look, the settlement the way it is, not going to fly. By the way, here's a background on how this basically entire scam played out. So here's all of the info for the world to see. I haven't seen anybody actually break down all of these details yet, but as you can see, it's pretty shady. So, what does this mean going forward? Well, here's what it means. Number one, there's probably still going to be some form of a settlement. So this idea that APE cannot convert to AMC, in my opinion, is highly flawed. There is likely to be some kind of revised settlement where a judge still authorizes some kind of conversion. So, any kind of conversion, merging APE into APE, is going to be bad for AMC stock. But AMC is already trending towards bankruptcy. So the best thing for AMC is to be able to raise money and hopefully be able to survive. But it's very, very difficult. Now, if you're holding APE, it might actually make sense to be optimistic about APE because there is a likelihood that APE, which is currently trading for 184, ends up merging into AMC stock, which is currently trading for $4.80. So there is a potential arbitrage here to buy APE and sell AMC. However, and this is the risky thing, if AMC, because of this trend towards bankruptcy and how long this whole settlement procedure could end up taking, if AMC drops to, let's say, $1, then you're still going to lose money if you're holding APE and you're trying to arbitrage into AMC. So, nobody knows exactly what's going to happen. But let's just put it this way. The board thinks retail investors are stupid. And by thinking retail investors are stupid, they set up an elaborate way to dump shares on you despite you as retail investors saying, no, we don't want you to authorize more shares. They still did it with APE shares, dumped those shares, and when that ruse failed, they went to the second one. When you don't vote, you automatically vote the way we want. And we're going to have our buddies who don't even have to hold the bag vote in the election on your behalf. That is the definition of Wall Street corruption, in my opinion.